Now, my first guest says that the AI build-out and bottlenecks have created great investment opportunities. I'm going to bring in Roth Capital Partners Managing Director, Senior Sales Trader, Charles Campbell. Charles, let's talk about this for a moment, because right now it's all about, okay, the inflation issue, or it's water, or it's power, And I worry about this because I feel like a lot of these municipalities and local areas, some cities, maybe some states, are going to miss out on what I think is one of the most amazing opportunities out there.
Charles, thanks for having me. We have demand shocks not only on financial assets, but also in natural resources. Obviously, the energy demand is tremendous, but there's also a water demand. The average compute center for the AI build is roughly 300 to 500,000 gallons of water per day, roughly 1,000 households. But the large data centers are 10 times that, 5 million, which is 10 to 50,000 households. Water supply. So that's just on the natural resource side, what's going on.
But now I've read a lot of this water gets in there, it's recycled, that golf courses use more water, that local neighborhoods that water their lawn use more water, that almond farmers use more water. And I also feel pretty confident in the ability for the private sector to come up with solutions.
They will come up with solutions if left to their own devices, but the incremental delta, if you will, from the data center build out is much greater than it is for golf courses. That's point one. And the AI trade has gone from compute to suppliers of memory and storage.
Let me just, I want to pick up on that, because we for instance, Micron, right? You see it's where the PE was, where the PE is now. I mean, it's not just that these things, folks, and we've been talking about this. I came into the week saying this is going to be the stock of the week, and obviously it has been. The stock has been on absolute tear. It's not, by the way, it's not just Micron. There's a lot of names that have been left for dead. Western Digital, for instance, you can see earnings estimates are going up. Whether it's revenue, whether it's earnings, they're all moving in the right direction. And again, a very similar chart. So memory is just one of these areas, right? It's one of these bottlenecks that doesn't seem like it's going to go away.
The providers of bottlenecks historically get better margins because they have pricing power. So it went from compute to the companies that are providing memory and storage. And that's what we're seeing now. That transformation is taking place. At the same time, capital expenditures, $700 billion for the biggest names, negative CapEx, raising temporary and permanent capital. The opacity in terms of visibility remains intact, so that unnerves investors. Against that backdrop, you have a Federal Reserve.
They're so unnerved that we're at an all-time high.
We are at an all-time high, and you see a number of international benchmarks at all-time highs as well.
So we're nervous, but we're making a lot of money right now.
We're making a lot of money, and go ahead.
I'm sorry, I have to segue. This Jim Paulson, I've loved Jim Paulson. I'm glad he came out of retirement and he puts on this great work.
Right.
What do you make, though, this idea that maybe we feel too good about earnings? He's saying everyone felt great about earnings in March of 2002. Everyone felt great about earnings in October 2007. Everyone feels great about earnings now. Of course, the inference is that could be next.
You're right. So Q1 earnings season, much better than expected. For the S&P 500, EPS 2.5 times better than expected. You take out the 17 AI names, still 2 times better. For both of those, the best earnings season since Q3 of 2022, okay? Like 13 quarters.
Right.
So, and what that did was, it lifted expectations for the full year, okay? So, on the one hand, it's justified, all right? You get some PE compression. On the other hand, the chart is the chart, and people are feeling good, they're enthusiastic, and they are feeling they don't want to miss out if there's an advance.
Of course, the only thing I would say is that we felt good about earnings here. You could have got out here, 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 you could have got out. Even if you rode that bump, you still had this here. So I just caution folks to be, if we don't use earnings as a key to figure out the market, what are we going to do? Flip a coin?
Well, you have to have some benchmarks. So you use earnings, you use economic growth. The economy is running hot. We have a new Fed chair. We've had 12 Fed chairs since 1930. In the 3 months since that new Fed chair was in, all 12 times the S&P 500 was down in the subsequent 3-month period.
Yeah, I've shown that chart. Let me ask you quickly about Warsh. Where do you come down? I mean, he's just added 2 veteran Fed economists. Yep. He's built out these committees. I think he's going to use that to dramatically change the way the Fed works. And I think that in 2027 will allow him to be more accommodative.
He has come across in the initial Fed day that he's had as more hawkish than expected. It was a hawkish hold last Wednesday. So what you're going to see is a new regime in a number of ways. SEP will go, the economic projections.
Right.
Forward guidance, probably gone, okay? He is going to reduce the balance sheet. That's a multi-year project,
Right.
okay? He's going to bring in new measures to evaluate productivity and inflation. Yellen talked about it, and Jay Powell talked about it, but they didn't implement it.
Right.
He brings in a perspective where it's needed, and I want to
He
do
threw
it.
down the gauntlet on his first day, right? I mean, Yellen had her dashboard, and she had a lot of different things, but for me, I believe he's saying, okay, I don't think he was necessarily hawkish. I think he's saying, listen, these are the rules now, and with this particular set of rules, you could say hawkish, neutral, but
perceived that way.
But when we change the Fed, particularly the way we measure inflation,
Yeah.
I think things could change a lot.
I think it could change a lot too. And he could look at AI and say, the productivity gains we get from AI are going to result in the typical technology price suppressant, i.e.
Right.
prices go down. not up.
Disinflation.
That's right.
Great stuff. Charles, have a great
Good to
weekend.
see you, man.
You too.